Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, June 6, 2018. So this is going to be more of an actual update where I'm going over some of the markets and everything that's going on. Last night was a little bit more of an informational type thing, but we filled up those spots real quick. I'm getting a lot of emails about redoing it, so we're actually going to put 10 more open on the $50 off per month special that we have going, so we're just going to extend it till tonight. But anyway, let's get started. So today we had the markets that were pretty they had a fantastic day, and again, really the main things that really we have to look at are time, sentiment, and technicals. Now, the time wise, we're running into the topping period, which I've shown you. It was the first one was May 25th, which it came the day before. We had a decent drop from there, and then the secondary top was on June 5th, which was yesterday, and today we had an extension of it, and it doesn't make the long side any safer, but I'm going to go over when everything doesn't line up together and what I went over last night as far as knowing when to be aggressive on your trades, when to go light, and when to be cash. So sentiment has been rising. Technicals, we had a little bit of a bearish divergence, which I'll go over, but the thing with the technical aspect of it that has always had me a little skittish about getting aggressive on the short side is the fact that we've had the Russell 2000 as well as the NASDAQ that are making new all-time highs, and for that reason I've always been, you know, a little skeptical about the whole short side, even though we're running into the time and sentiment and we had a little bit of a bearish divergence, because it sometimes they extend. So it's always been a, if you're going to trade, trade small. We've been saying that from the beginning on this, that now's not the time to get aggressive. And I've been, like I've said, every report that I've been saying is I've been a little bit, you know, cautious about the short side. And, you know, I'm cash right now watching the markets, and I'm going to wait for them to show us that they're forming some kind of top. And until then, I'm going to watch it. But the fact that we're in the time period that we're expecting the, you know, a top to hit, we know that we have sentiment high. I'm not going to chase the long side on it, because a lot of times when that happens, what happens is we see an abrupt turn and a big move to the downside. So I'm just going to wait for price to trigger that particular trade setup, and from there all we're going to look for is the sell trigger, and when that hits, you know, you get short and you put a stop above it, and that's really the name of the game plan. But the fact that we're heading into these time periods where we're just past this one, it doesn't make the long side, even though we're making new highs right here, it doesn't make it any safer. So this is the pattern that I was showing. Actually, this morning I sent out in the in our morning notes that this was the S&P 500 futures, and obviously they were trading around here in the morning, and this is a bearish wave, and basically the way it works is you count their tops. So you have 1, 2, 3, 4, and the way this pattern works, it allows for it to break through this trend line. And the important part to know about it is the target, and this is the target. You take your 1 and your 4, you draw the trend line, and this is where we're at. So it's pointing anywhere between 2650, 2640, but you have to wait for price to stop going up on it, and that's an important part. Now today we I'm sorry, let me, I'm on the wrong thing. Hang on one second. Okay, so this is the S&P 500, the cash, and you can see it's the same pattern. And what today was, when we started to see, we saw a little bit of selling going on, and the way that this was going to work was if the S&P took out the 2745, that was a sell trigger, and then your stop would be right above the 2757. Came down, it was never triggered. We found buyers at the 50-day moving average, and we kept going up. So there was, you know, I just stayed cash. It would have been, yeah, very nice. You could have taken a long trigger, and that was above the 2757, which I put in the morning notes, and your stop would have been at the 27.45. So if somebody took it, they're doing okay with it. I put down that I wasn't interested in the long side, and I just gave you my reasons because of the time, the sentiment, and it just really, I don't want to be chasing this rally at this point. So we have some bearish divergences, as you can see here, but these are starting. This move today started to remove some of the ones that were intact right now, even though we have them from when they started here. But if we look at the 60-minute chart, it was the same thing where we have the bearish divergence in place, but the move today was strong where it looks like it could wipe out this divergence. So it may be a little bit of a waiting game, and since the first long that we took was all the way down here at the 2640 level, my target has always been 2800. Now when we came up and made this double top and dropped, I didn't think the 2800 was in play anymore, but what happened was we found buyers and we took out these highs, so it's in play. Now, does it mean it has to get there? No, that's why I'm saying it's risky to assume we're heading up here, but it's one of my targets, and until we see some kind of sell trigger, I'm just going to sit and watch. It's going to exhaust itself, just like every other one of these moves exhausted itself, and I'm not going to try to press a short trade because, like I said, the S&P with the Nasdaq and the Russell 2000 making new all-time highs, it leaves the door open for the S&P and the Dow to make new all-time highs, and it's just the time period is not there. Neither is the sentiment, because that's at extreme bullish readings. And if we take a look at the daily chart, we actually have some bearish divergences on the daily as well. So if the bulls continue higher, the next resistance is going to be the 2777 and then the 2789, and then above that it's going to be the 2800, which has been the actual pattern target the whole time. So right now, I would be very careful, on the long side, even though we could be head higher. Short side is the same exact thing. Wait for a trigger to kick in where price is saying it's making a lower low, and when you take that trade, you automatically put your stop at the previous high. So right now, if we open up in the S&P, take out to 2766, you can jump short, and what you do is you put your stop at 2772. It's not a big risk on this. If it's right, you're going to have a fantastic fill on a short side, because like I said, the target for this particular pattern's pointing all the way down at the 2650 level. So if you can get short somewhere up here, it would be fantastic. But there's there's a lot of the bears have a lot of room, a lot of things they have to make up here. The first thing, 2741, they got to get through. If they do that, then they have the 50-day moving average at 2730 and then 2703. This is the bull bear line. If the bears push it through it, there's going to be a reaction trade down to the 2650. So with that, be very patient. Trade small. If you trade, let's just say, I'm just going to throw out options. If you trade 20 options per trade, you lower it down to 10, maybe 7, and you keep your stops tight. So if you get stopped out, it's a very minimum hit to your account, and that's really the way you trade this. And this is what I mean by getting aggressive and not getting aggressive in the trading environment. And right now it's telling us not to get aggressive because time period, we're looking for the reversal. Sentiment is high. Technicals are saying we could be making some type of top, but the fact that we have the Nasdaq and Russell making new all-time highs, you got to be very, very careful. So with that, have a great night, and I'll talk to you guys next week.